Hello, everybody. I'm Estela Cuesta. I'm a market analyst and actually the editorial manager of a team of editors and market analysts covering the full range of processed food commodities markets here at S&P Global. I'm joined today by my colleague Jose Gutierrez. He is the market analyst specialized in dried fruit and nuts and spices and also in olive oil. And it's because it's actually the olive oil market, what gathered us here today. It was an extremely volatile market last year that resulted in skyrocketing prices. Jose, hello.
Hello, thanks
Can
so much
you,
everybody for listening.
can you please tell us a bit more about that market situation that impacted really consumption demand last year?
Really, the olive oil has been a staple for decades in Mediterranean countries, particularly in Europe, and a very aggressive commercial policy of the Spanish industry raised the market share, particularly in the United States and Japan and Canada. In the past couple of years, the prices for oils started to rise. That is started with the Ukraine conflict, and not really in the beginning olive oil because it was not massively consumed, but disappointing crops in Spain, Italy, Portugal, particularly due to severe drought, cut the inventories at record lows, and suddenly the prices skyrocketed because everybody in the industry were conscious that really olive oil was scarce, and the consumption and the demand in the United States and other markets whose main consumption is extra virgin oil, didn't stop or didn't halt or didn't slow. And the process to slow the demand was very slow, really, in the very beginning. So the prices reached real records, particularly in the last summer.
What was the stock situation before? Because obviously the olive oil is a commodity and the industry keeps stocks like security levels before the new crop starts. Was it the perfect storm? I mean, was the stock situation at the beginning of the harvest as well low?
That is a good question, really. The European Union is the main world supplier, and the European Union is really interested in maintaining the olive oil production because it's a very important revenue source in all of the Mediterranean members. So establish inventories at around 300,000, 400,000 metric tons annually to find a balance between securing the local consumption and achieving good revenues for growers and bottlers. What was the problem really? Spain expanded the olive oil production for years and years and years, reaching real records, 1.7 million metric tons. And the prices and the inventories skyrocketed and really reached records, and the prices hit the rock bottom, even for extra virgin oil. And of course, the global consumption rise, relying on these prices. And suddenly, when these inventories fell down, not only because of the severe drought, also because the irrigation was restricted, because irrigated trees were at the basis of the production expansion, the prices started to skyrocket, playing tricky games about everything you can imagine. Really, official inventories, the European Union is the only place where you can find data about official inventories. It's not common, for example, in North Africa, in the Middle East, even in California, or even in Argentina or Chile, where there are minor crops.
So that is actually a fact,
Yeah,
the inventory
that is a key
situation.
factor, and all the players are playing with this data to push up prices or to cut prices, particularly in the very beginning when the harvest is starting in the olive plantations around November, December. The first harvest is for the table olives, sorry, and in September, October, and after that in November starts the auctions for olive oil between the mills and the farmers.
Keeping us last year still, so what was the reaction of the supermarkets, the retail chains, amid
It
skyrocketing
is,
prices?
yeah, this was it is the prices really started to skyrocket in Italy and Spain because the rotation of the olive bottles are very high in these markets, and after that the prices started to grow in importing markets. For example, United States, Japan. The process starts really in the domestic market where the olive oil is produced
Mhm,
because they are the main consumers and they are exporting. In the case of Spain, it's around the half of the 30% of the production is exported. So normally it's in the beginning, and just now the prices are falling in Spain and Portugal particularly, but not really in Italy because Italy is the main exporter, but it's not the main global exporter, but it's not really the main producer. Normally, Italy is importing from different countries, from Spain, Tunisia, and exporting, particularly the high quality olive oil. And just now, the prices are still at highs in Italy, but the Spanish production is determinant to settle the prices, particularly for extra virgin oil, the most demand in the United States and Japan.
mhm. Has there been any impact on consumption so far regarding the high prices?
Regarding the high prices in the previous season, particularly in Europe, the consumption sharply fell down, particularly in Spain and Italy. After that, in Greece and Portugal. And in the difference maybe in the United States, because the United States has been the driver of the growth for global olive oil consumption for several years, is very flexible. So when the prices started to soften and the purchasing power parity started to recover in the second half of the year, the US import started to recover despite of the highest prices. And gradually, the prices are starting to fall in Spain because mainly because the bottlers wants to recover the lost market share against other oil staples, for example, sunflower oil, rapeseed oil, because it's not that the consumption is not only for for home cooking, it's also for canneries, particularly for fish can, for canned fish. So just now the prices are falling in Spain because the cycle is recovering, but the falling prices is slowing in Italy. Maybe we have to see that there are different economic trends because the market is more concentrated, the transport logistic is there are many bottlenecks in Italy compared to Spain. So that is the situation just now. Recovery in
Mm.
Spain for in market share against other oils, falling prices, but in the case of Italy, the prices are not still sharply falling. It's taking a little bit, but for sure in the second half we will see a sharp fall in Italy also. If there
Mhm.
is nothing, that the outlook is going to change.
I understand that the declining prices at the moment have to do a lot as well with the harvest outlook for the
Correct.
coming year.
Spain has had a bumper crop, really on average, around between 1.2, 1.4 million metric tons. That is a very good level. In Italy, not really. It's 250,000 metric tons. That is at a low level. But this is the factor. There are other origins outside the European Union, Tunisia and Turkey particularly, whose crops have really expanded and they have reached bumper crops. They are playing in a different league with mid and low quality olive oils, but at the same time, they are providing high volumes. So when
Mhm.
you are seeing the global package, the international prices are falling. And as a matter of fact, in the case of Italy, the Italian bottlers are raising the imports of Spanish olive oil and Tunisian olive oil. So the process for falling prices is close in Italy just now.
Mhm. Okay, so we keep the eyes opened regarding that harvest outlook for the current season, actually, that is gonna start this
Yeah.
month, I think, yeah, right?
Yeah.
Um,
Mm,
and
I
yeah.
think it's important just now
Mhm.
the trade conflict between the European Union and the United States, and to know how the retaliatory tariffs are going to finish, or if there is going to be an agreement, because United States has been determinant in the last year, in the past seasons, for driving the prices, particularly for extra virgin oil. So if there is the territory tariffs are really high in the United States, and this is the final of the process, maybe the demand for Spanish or Italian olive oil in the United States is going to fall, because you cannot.
Yeah.
It's not really an affordable price. So we have to see in the following month. Maybe this is, if we can talk about a black swan, this is the black swan, because nobody in the industry was expecting for that, really.
Yeah, this is actually the line of coverage for your monthly updates on olive oil. So for anyone interested, we cover the olive oil market on a monthly basis. And well, that's all from us so far. Thank you, Jose, for your time, and thank you everyone for listening to us.
Okay, thank you so much. Have a good day. Bye bye.
Bye.